Gold, silver, June 8th, 2021, 7:18 p.m. Hawaiian Standard Time. How you guys doing today? Let's take a look at the future contracts for gold and silver. We're looking at gold right now. Just as a reminder, I'm living in Hawaii, so we're on Hawaiian time, and we're in the Hawaii time zone, Hawaiian Standard Time, which basically means that for this particular video, that this candle right here is already trading for June 9th. This candle is June 8th. So we see for June 8th, the gold futures contracts had quite a bit of a sell-off with some rallying up to here. So look at that, closed almost exactly where it opened yesterday. And for the trading that's going on right now, kind of parallel in this line. Take a look over here. When I hover on this candle, see the close. There's going to be a date, closes. These are moving averages, which are these lines here. See the close, 18.94 and 40 cents. So if you had seen some videos prior, I was wondering, will gold continue to close above the 1880 mark? What is going to happen at the 1880 mark? And right now we're closing above it. Let's see a little bit here. Also that 1900 mark, we're kind of boop, 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 knocking on the door to get over there, to get on the other side. If we get on the other side and continue to close above it without having any big sell-offs like this, then we'll probably move higher. Even having sell-offs like this, maybe gold will move higher. We will see. It certainly did here, didn't it? Well, I guess it was. Buyers came in, then sellers came in. So that's what we're looking at. That's what I'm looking at. And since I'm talking to you, it's we. Let's take a quick peek at the line chart, since I'm going to put that into the blog post. All right. So line charts, use them, don't use them, whatever you feel like. But way back, starting around 2012, I had learned to look at line charts for W and M formations. And what I mean by a W and M, like for example, this would be an M right here. See how it sold off, and for right here, here would be a W. See how it went up. It's definitely not a guarantee. Here's another W, but it's easy to look in the past and see what happened. It's more difficult to be in the present moment and see what's happening and will happen. So for example, is this the first part of a W? Are we going to see some movement up? When I was taught this, I was taught to look for these really clean ones like this. And generally, the more that this part of the W was up, moving to the right, then the more of a bullish indication that would be. And this was a strategy of you would enter whatever position you were going to get in when this part of the W passed this point right here. So the same thing for the M. Where did our M go? Here's an M. All right, see how it's got a slight slant. It's not super slanted down, but you would get into whatever position when this line starts passing this point. And so that's what we see that's going on for the line chart of gold. Let's take a look at silver. Silver, we see also quite a bit of a sell-off today. And compared to the sell-off of last, what day was that? Third. Was it last Thursday? Yep. Okay, so last Thursday, we're in the bottom 50% right now. Prices close in the bottom 50%. Yesterday, we made it to the top 50%. We were starting to be in the top 50%, but we're in that bottom right now, which you can see there's a lot of price congestion right in this area, but it's still above the $27.50 mark that we have been watching. See that right in here? A lot of price congestion around this $27.50 to $28. So that's still what we're looking at. Take a quick peek at the line chart. Well, maybe if for some reason prices start going up, that'd be a strong line. I like looking at the line chart just to see what it shows, but me personally, I prefer to trade off candles. If I had to give up one of these charts, I'd give up the line chart. I think it's fun, it's novel. However, even if something is making a W or an M, if there is resistance or support right there, I think that kind of takes precedence over whatever formation. But what the heck? Might as well add it in the video, right? With that, my friends, we're looking to see is silver going to stay above $27.50? If it doesn't, what's it going to do around that price range? Right now, it's maybe $27.75, $27.80. It's kind of been staying in there, right in here. We want to see what it does between this point of $28 and then once it starts getting up around $28.50, what's going on with it. The metals are really interesting because there's a variety of ways that you can interact with the metals, either investing or trading. You know, there's the physical metal, there's the futures, which is what we're looking at here. There are metal mining stocks, and then in that category of metal mining stocks, there are different things like royalties, royalty companies, like the exploration companies, like tier 1 miners. It gets really niched inside of the mining space. And then you have ETFs that are going to be tracking the price action of these futures contracts. So there's a lot of different ways that you can play it. The simplest way to play this is the physical metal. And the reason why I say that is that there's something called counterparty risk. So for example, when in these future contracts, you have a counterparty. If I'm buying a future contract, there's someone selling it to me, and we are counterparties to each other. In fact, the way that I look at it, you even have a brokerage, you even have an exchange that needs to work. We need to depend on the electric company to work, and all these things. All these, in my view, it might not fit the textbook definition, but what the heck, you know? I'm an old school Marine. We just want to get things done, and if it seems like there's a little bit of risk in there, I'm gonna think about it, or I'm doing my best to think about it. So the electric company, there's all these things that are risking my potential investment. But when you own the actual metal and you have it somewhere in your vicinity, there's no counterparty risk. I guess you could say, well, the U.S. government, assuming you're in the U.S. government has confiscated gold, whatever. Back in the day, they outlawed it, and it was illegal for U.S. citizens to own for a certain amount of time. So in that essence, you know, yeah, there'd be a little bit of counterparty risk that way. But other than that, like if you own a rental property, you really need that renter to have a job or have some way to pay you the rent. Not true when you own a bit of the physical metal. It's just there, it's in your hand, la da da da. So you can consider that if you're not if you're really brand new. However, it doesn't necessarily have the same it doesn't have the same kind of leverage that you have in the futures market and these other markets. But those other markets, they're more complicated. There's more things to know. So isn't that wonderful that you have this beautiful learning journey ahead of you if you so choose to go down that road? You want a little bit of help with that learning? Why don't you do your good buddy Brent a favor? why don't you show some love and give some thumbs up to the video, subscribe to the YouTube channel, join the Facebook group, head on over to the website and enter your email address in there, and send me some smoke signals over here in Hawaii, send me a carrier pigeon, do all this social media stuff, and most importantly, leave me a message. Tell me a little bit about yourself. We'll have a conversation somehow, whether we're talking on the phone or whether we do some Zoom stuff. Who cares? Whatever. Let's have a conversation and see if there's any synergies between your personality and my personality, and maybe we can do something together. You guys have a fantastic night and keep watching the movement of the metal prices. Bye-bye.